TC Backer, TC Backer.
When installing a new roof, you want something that protects your home for years to come and looks great. With the GAF Energy Solar System, you'll not only get a roof that's secure and stylish, it's also financially smart, as solar can save you money on your energy bills, and the solar can pay for itself and your roof over time. There is no better time to go solar than when you're installing a new roof. It's one project, one crew, with less disruption and hassle within your home. The GAF Energy Solar Solution is what we call direct to deck, meaning it won't compromise your roof's waterproofing protection. And it can come with the best warranty in the business from a company that has been around for over a century. Our solar roofs are well designed by roofing experts for roofers. They look great because it's integrated into the roof. GAF Energy Solar Systems allow you to turn your roof into a financial asset. It generates energy for your home so you can run on sunshine. That means you won't need to buy as much power from your electric utility, lowering your monthly bill. With a policy called net metering, you can also feed electricity back into the grid when your solar is producing more electricity than your home is using. You'll get a credit for that electricity, lowering your power bill even further. And with tax incentives available, your overall solar system costs can be considerably lower, meaning even more savings for you. With all of these savings, the system can actually pay for itself and even your new roof over time. There are over 2 million solar homes in the U.S. now, and more people are switching to clean renewable energy every year. Your roofer can create a customized solar proposal for you by assessing your roof and looking at your power bill. The proposal will have pricing specific to your new roof and solar project. Again, there is no better time to go solar than when you're installing a new roof. So consider choosing a GAF Energy Solar System that is roof integrated, saves you time and money, and contributes to a vision of energy from every roof.
Backer. TC Backer, TC Backer.
No sound.
Start over again?
Nope.
We're good?
Yes.
All right, we are good. So let's try that again.
Yeah.
Welcome to episode 78 of Behind the Tool Belt TC Backer Construction. We got a pretty informative episode here today. We got a good friend, Michael Hanscom here. He's an accountant. He's our business accountant, Ty's personal accountant, good friend. We're going to be talking about some tax credits and such, you know, kind of piggybacking off the last episode with solar. We're going to talk a little bit about last week on how successful that food drive was, and touch on the normal stuff that we got going on. So hopefully everyone's enjoying their week. And you want to maybe introduce Mike here?
Yeah, so this is Mike Hanscom. Mike's been a long time friend of mine, even before I believe that you did our taxes. I was introduced to you from my good friend, our good friend Pat, who's no longer with us today, and that's how far back that goes. But you know, we've trudged the road to the happy destiny, through the pandemic, through the recession, saw good times, bad times together. You've been my tax accountant for over a decade and a half. My financial advisor, my jailhouse lawyer at times, and that's no joke. But we go way back, and that says a lot about each other's integrity. I think when you look back over the years of the things that we've been through and the things that we've learned together and have grown together in business. I've watched your business flourish. You've watched mine flourish. You've kept me on the right track and have done the right things and just been, honestly, Mike, and I don't know if I've ever told you this or not, but you've been a mentor to me as well over the years. And I should have probably said that a long time ago to you, and I'm not just saying that because we're on camera tonight. You definitely have been an inspiration to me in my personal life, not just business, but definitely in my personal life. We've gone through, a lot. If you really seriously think about it.
I remember when I first started doing your taxes, and you were hanging siding.
Mm-hmm. Yeah.
Yep. Man, that's got to be at least 20 years ago.
Yes, yeah, at least. So, it goes back. I was being a little light and generous probably on the 15 years, but it's definitely been 15 plus years. This goes back to the days of when everybody was a 1099. Everybody was a 1099. Like from Kim. I think Kim may have been a 1099, so that wasn't that long ago, but in 2011 things changed a little bit with insurances and stuff like that, and the criteria for you to be a subcontractor or a 1099 employee, things changed. So that meant basically if you were getting paid like as if you were a subcontractor with a 1099, you basically had to provide workers' comp and general liability. Well, I couldn't pay an individual enough an hour for them to afford workers' comp or general liability. So we were kind of forced in putting people on the books. And again, that was one of those growing pains that we experienced that you helped walk me through at that point in time. So you started doing our payroll then. I know that was one of our biggest milestones back in 2011, which really wasn't that long ago. If you think about it, was 10 years ago. 10 years ago. Mm-hmm. So 10 years ago, that was probably one of the biggest or scariest moments in my career was, oh my gosh, are we going to be able to afford this? The workers' comp, the general liability, the unemployment, withholding taxes. Like, are we set up for this? Are we ready for this? You know what I mean? So without Mike's help walking us through that, we would have never been able to do that on our own. I don't know who I would have trusted enough to give me the correct advice to be able to walk through that. And then, but that was something I felt so relieved when we did that, because then I knew you guys were covered. Mm-hmm. If anything would happen and you got injured and fell off a roof, and I think that's how you explained it to me, like, dude,
that was certainly one of the factors.
Yeah, like, dude, you're off the hook now, man. Yeah. Like, if someone gets injured, you're okay. Well, then what happened to me then at that point in time, I thought, so I realized that was it, and it's giving me freaking goosebumps right now, for real. Okay, so that got me super excited. I was like, yes. So then my next goal is I want to be able to provide health insurance. Mm-hmm. Do you know what I mean? Because that lit my fire. Because at that point in time, it really wasn't about me anymore. Do you know what I mean? It was about everybody.
Right.
You know what I'm saying? At that point in time, we were struggling to just make ends meet. Really, we were just coming out of the recession. Okay, now you're telling me we got to put people on the books. You know what I mean? It was like, dude, I was tripping. Yeah. You know what I mean? And you could only imagine. And now looking back, it's like, well, that should have done that earlier. Yeah, you should have been doing that all along anyhow. You know what I mean? But it was just one of those things without Mike's help. Right. And Mike helped me. Heck, I was, telling me things that I could write off that I didn't know I was allowed to write off. And that was before I was working for someone but getting paid as a 1099 contractor, but technically I was an employee. Mm-hmm. This goes back, I was in my early 20s, late teens when I first met Mike. Okay, so it goes back to probably 20 plus years when you lived over on Princess Street, and I think somewhere else before that. Where did you live?
No, that
was it Princess Street?
Yeah, that was probably it,
yeah. So, it was crazy. Those days were crazy, but then the health insurance thing, and now we're talking about 401ks. You know what I mean? Mike introduced me to IRAs, and now we're talking about 401ks. And honestly, if it wouldn't be for the guidance of Mike Hanscom, we wouldn't be here today. I mean, God's honest truth, it's the partnerships, the relationships, and we talk about this all the time, that make us who we are as individuals, like I was talking about earlier, about our personal relationship and connections that we have outside of work and also in our work space. You know what I mean? How much information you have provided me over the years in that space. You know, it's just, it's thank you.
Yeah, and it's been a real pleasure watching you grow too.
Thank you.
You know what I mean?
Yes.
It really is.
Yeah, man. Thank you so much.
I get enjoyment out of that too.
Right. Thank you. And I didn't mean to go off on a tangent, but that was the truth being shooken out of me. Expressing my gratitude for you and how much of an important role that you do play at TC Backer and all of our teammates. You know what I mean? Like they don't even know. A lot of people don't even probably realize that when they wake up Friday morning and their money's in their bank account. Why? In case you didn't know, it's because of this guy right here. Do you know what I'm saying? It's because of this guy right here.
But if you don't have it, it's not because of me.
I should have worded that the other way around. If it's not
it's
in
somebody
there,
else's fault.
it's because of Mike. I'm just kidding. Things do happen, though. Hiccups.
Things happen. We deal with them, though.
Yeah, hiccups happen. We make it happen.
Yeah, especially in the world of technology and automation and all that stuff. You know.
Yeah.
Sometimes the bank account
system,
information is wrong. I mean, there's things that happen, but we get it done. We get it taken care of immediately. So
Absolutely, man. And that's the thing I love about you, Mike, too. I was thinking this earlier today, and I'm sorry I keep going off on a tangent, but this is going to be a great freaking episode. I mean, it really is. I'm so glad. I'm glad you're here, man. For real. All of the times that I've randomly called you and you're in the middle of something, I'm like, yo, Mike, I need this, man. And how you just went over and beyond for me. Like, I can't do it right this second, or I'm on it, or whatever, but you always responded. And typically that same day, I don't know how many LLCs we've started. Okay, for instance, like, yo, Mike, I want to do this thing. I got this great plan. Yeah. All right, man. What's the name of it? I'll run it through and make sure they don't already have one. Whatever. 3, 2, 1, got it done. All right, man, I got it. 3 days later, yo, I got this for you, man. It's like, thank you. I mean, that's just the tip of the iceberg of the stuff, the miracles that you have performed for us, and going with my crazy ideas. Thank you. And talking me off the ledge at times too, where the mentorship plays a big part, with your experience of being in this business for as long as you have, man. I appreciate that.
Yeah, a lot of times the best thing we get is a different perspective.
Yes.
That's really the important thing. That's why I talk to people too. I need a different perspective.
Yeah.
And that's what really helps.
Right on, man.
Yep.
Right on. So what do we want to talk about tonight? Like, who is Mike Hanscom? What do you do?
All right. Well, I basically primarily do. My name is Michael Hanscom. I'm the owner of Michael Hanscom Tax and Financial Services. We're located in West Manchester Township, over off of Carlisle, between Carlisle and Bannister on Adams Street. Small shop, a couple of employees. We do a lot of taxes, and we do a fair amount of payroll. One of which ties companies is probably the biggest amounts of payroll we do. We have a couple other larger companies too, but certainly this is definitely one of the biggest accounts we have. And we do a lot of taxes for small businesses. Small meaning less than $100 million a year, right? Okay,
right.
let's say,
exactly.
right. But heck, I mean, with payroll, you probably have 50, 60 people. I bet on payroll.
Yeah.
And, then we do taxes for the individual person all the way up to, for businesses.
Yeah,
and,
right.
Last year we helped a lot of companies with the PPP loans.
There you go.
This was a difficult year.
Yeah.
But there was a lot of opportunities for businesses, and
Right.
PPP was a godsend.
Yeah.
Okay? It really was a
Absolutely.
blessing for a lot of businesses.
Right.
And I was able to help a lot of businesses, obtain that. You remember what we went through at the beginning of the pandemic,
Yeah.
right?
Yeah,
I mean,
we all thought
you
we
and
were
me
gonna
were on.
die.
We were,
Yeah.
right. We were
Yeah.
like, oh my God, how's this going to turn out?
Yeah,
And,
exactly. Pennsylvania's closed down.
Right,
What are we gonna
closed
do?
down. How are we going to do? Everybody runs on a shoestring. You know what I'm saying?
Yeah,
Nobody's got tons of money in the bank. How am I going to make it through next week?
Well, and that's the scary part too. And thank goodness we were in a good financial position. But it could have been so easy to be caught up in, like, who would have expected this? So as a small business owner, where constantly the money comes in, but you're constantly dumping it back into the business. Yeah. Nothing's really sticking, especially as you're growing as a small sole proprietor. Things are moving, and you're thinking, man. The economy's good. I'll worry about.
It was.
Yeah, I'll worry about putting money back later. Fortunately, with what we've been through back in 08, 07, was the scary talk started to happen, the late end of 07, but 08, 09, and 10, I think for me personally, I learned a lot through that. And Chris, I talk about that all the time. You know what I mean? That has never left the forefront of my mind. And we can talk about the PPP later on. I think that's going to be a good topic for small business owners and that coming to an end and maybe how they should handle that.
Yeah, making sure you applied for forgiveness. That's the key thing.
Right.
It's almost automatic, but you still got to apply.
Right.
So, I've been sending out emails to all my customers, just reinforcing it.
Right.
Make sure you applied for the forgiveness.
Right.
And then some businesses got second rounds too.
Wow.
Okay, if they were really affected.
Yeah.
If your revenue was down by a certain percentage in any one quarter compared to the previous year, you were also eligible for a second round.
Nice.
And some businesses, that was especially restaurants, bars, things
That's
like
great.
that were really affected.
Now, is that still available to people?
No, not at this point in time.
Okay,
Yeah.
I was just curious in case there's a small business owner watching out there, or anyone listening that.
But so primarily what we do is we help businesses and individuals with their taxes and their payroll.
Nice.
That's primarily what we do. I tend to kind of specialize. I don't do a lot of bookkeeping.
Yeah.
Because I really think it's better to have bookkeeping in-house. You know how you do it?
Yes.
You know what I'm saying? That doesn't
Yes.
mean you don't get consultation. That doesn't mean you don't get
Yes.
assistance. But you need that information right there.
Yes,
You know?
absolutely.
And,
I
and
don't think
nobody-
we're large enough.
Right,
to have
and nobody
that outsourced.
understands that better than the people that are doing it for you.
That are doing the
that are in
accounts
it every
payable,
day.
the
That are in
receivables,
it every
yeah,
day.
yeah.
Now, I will add though, on the flip side of that, people just starting out, that's usually the most painful area for them because they don't
Yeah.
have. You know what I'm saying?
Yes.
You got to get into a certain arena where you can actually do that.
Yes,
Like,
find out what software is going to work.
Right,
best.
exactly, and have the employees to be able to do it. I mean, just think about how many administrative people you have.
Yeah,
You know,
we
it's
just
a
hired
fair
2
amount
more
of-
today.
Right, with the billing and the bookkeeping and the
Yeah.
payables, it gets pretty.
Absolutely.
And that's got to happen.
Yes.
That's the thing. So.
Yeah.
The organizational part, in other words, the more accurate and organized your information is, the better decisions you
Absolutely.
can make. Okay?
Yes.
The better decisions you can make.
Yes.
Now, I know you wanted to talk about, so again, located in West York,
Yeah.
717-855-2441. You
Right
can
on.
find me on
Facebook?
Facebook,
You got a Facebook
Google,
account?
anywhere.
Cool.
I'm in a
Google?
lot. Yeah,
Right on.
I've spent a lot
I
of time.
actually looked you up on Google today to get your address, so we could put it in the comments who you
Yeah.
are.
So we're easy
what
to
your
find.
website
We're
is.
easy to find, yep.
Yeah, and his phone number. If someone could put that in the comments, that would be fantastic.
Yeah.
All right, so let's get
I do
down
have
to
a
the
quick question
basics.
for you, then,
Go
Mike.
for it.
You had said that you do like personal taxes. Obviously, you do it for LLC, sole proprietorships. Do you do S corps and C corps as well?
Yeah, Ty is actually an S corp, and we made that decision. I know you wanted me to discuss that. We might as well jump into that now.
Sure.
So,
Wherever
so
it goes.
when do you decide to become an S corp? Okay, because Ty originally was not an S corp. Now, an
Right.
S corp is just a special tax election. Okay,
Right.
it's not a formal structure per se.
Mm-hmm.
Because really, you're an LLC choosing to be treated as an S corp for tax purposes and primarily federal taxes.
Mm-hmm.
Right. What that allows you to do is, so you have to first of all, the owner has to be on salary. The IRS calls it a reasonable salary for what you're doing, and basically, what would it cost to replace you? Okay, but there is some flexibility in that. But the real kicker with that is now, as a sole proprietor or even a single member LLC or partnership, they're all paying self-employment tax. Okay, that's your Social Security and Medicare, and that's 15.3% of your net income every year. Now, don't get me wrong, we should all be paying into Social Security. At least I'm trying to pay in as much as possible at this point in my life, because
Right.
I'll be collecting it not too far from now. Okay.
Absolutely.
And people are like, "Well, how do you know it's still going to be around?" Well, I'm going to be pretty upset if it's not around now. You know what I'm saying? I'm 59 years old. So,
Right, seriously.
yeah.
You don't
so-
look a day
but-
over 45.
Right. So, but they're not going to get rid of that as political suicide. Okay. So that doesn't mean there won't be some adjustments made to it. That doesn't mean there might be some reduced benefits. They keep stretching out the retirement age, but that's all irrelevant. But the point being is that, but that 15.3%, when you're an S corp, once you pay yourself a reasonable salary, you're no longer, the rest of your profits are no longer subject
And
to that.
that's what we did. We got
Okay.
to the point where we felt comfortable, and Mike was like, "Hey, you're at that point now," because I wasn't for the longest time collecting a paycheck,
Right.
Until we became an S corp. Because again, everything continually went right back into the business. So Mike was like, dude, you might want to, and not just for tax purposes, but I had no Social Security.
Right. And
I had no Medicare.
And as a sole proprietor,
Right.
okay, or a single member LLC, or even a partnership, you're not allowed to take a wage.
Right.
Okay, the IRS says you can't pay yourself that way. You can take distributions, but it's just similar to paying yourself like you're a 1099 person. Okay, meaning that it works out on your taxes again. Now you still will pay the self-employment tax on that, but when you think about a fair amount of profit now being, so you're on salary, plenty of other people are on salary. So, but one of the things is I tell people, wait until you get to a certain size. I don't recommend, Harry Home, whatever.
Yeah.
Joe Roofer go out and start an S Corp, because there are you do have to do good record keeping.
Yeah.
Okay. And you can no longer treat it like your personal piggy bank.
Right.
Okay. You know what I'm saying? Well, I just need some money. I'll run down to the ATM and take some cash out. Well, that may work okay in some other fashion. It doesn't work that way with an S Corp.
Yeah.
Right.
It really is a separate entity as far as that goes.
Right.
Yeah. No,
But there is
that's
some
great
significant
That's a great
savings.
question.
Yeah.
Significant tax savings. But I'm not saying you should blow off paying into Social Security, if that makes sense too.
Yeah.
Do you know what I'm
Right.
saying? But
Of
there's
course.
balance with that.
Yeah.
Right. And but your salary can change too as the business grows.
Right.
Okay.
From what I'm gathering out of it, basically, when you're a sole proprietorship or an LLC or something like that, if you're not taking what in the accounting world they call owner draws, basically all of your profits that you're making as a business would be considered income as you as the owner, correct? Until
Well,
you
it
become
still
an
is if you
S-corp?
took it, even if you took it as a distribution, okay, it's still taxable income.
Right.
It's not an expense for the business if you're a sole proprietor
Right.
or a single member
Right,
or an
'cause
LLC.
you are the business.
Because you are the business,
Right.
right. So there's no paying you. So sure, you could take draws all the time,
Yeah.
but it's not an expense. So at the end of the year,
Correct.
all your other expenses is going to result in net profit, and that's what you're going to pay tax
Yeah.
on.
And when
okay?
you become the S corp, the salary that you get as the
Right,
owner is now
include-
considered
right,
an expense.
Right, and they have,
in the business
remember,
world.
as a sole proprietor, you're paying the full 15.3%.
Right.
As an owner now the business pays half for him.
Right.
Okay?
Right.
You know,
And that's another good point, Chris, that you brought up. I mean, great questions.
Yeah.
Absolutely great questions. That's
so-
I knew there was going to be so much that we could talk about.
again, I get calls from people all the time. I want to start an S corp. I'm like, no, you don't. Yeah, I'm sorry. I mean, just
Yeah.
really, not at this point. You don't.
Right.
Yeah.
Down the road, yes. Let's look at, because there's more costs involved. Remember now, unemployment applies to the owner too. You have to be on unemployment. You're now an employee. Okay, so you got that. You got your Social Security and Medicare. There's other costs that go
Yeah.
into saying, should I do this or not?
Right.
But once you already have a bunch of employees, it was really not that. It was kind of a no-brainer at
Yeah.
that point.
Yeah, man. How crazy is it? I said to someone the other day, I think it was Mark Jones, I was talking to him. I said, who would have ever thought that I would have needed a fleet management person? Someone to look over the vehicles to make sure that they're getting properly maintained and oil changes,
Yeah.
tire rotations and brakes and things of that nature. Now, granted, you and Brandon and Tam has helped or whatever, come up with a spreadsheet. But who would have thought of that was the furthest thing from my brain. The biggest stressor of my life was oh my God, I'm gonna have to put people on the books. Just short 10 years ago.
Right.
You know what I mean? Now we're considering like someone needs to pay attention to what's going on with these vehicles. You know what I mean? And now we're talking about S corps. What?
Well, I remember the thing.
You
Remember the
know,
discussion we had regarding payroll, and I said you can take that worry that you were just talking about earlier off the table.
Yeah.
And focus more energy on doing what you do best.
That's right. That's right.
That was crucial.
It was. That was a huge turning point in our company. I mean, it really was. And that was probably some of the best advice early on, that you'd ever given me was, hey, we really need to do this. And you were up on that. When those laws changed, dude, you were on it. And there was audits. Workers' comp was auditing to make sure that that's what we were doing. And then if we were still paying people basically cash and giving them a 1099, and if they didn't have workers' comp, basically you were paying 25 cents per dollar. And we got hit.
Remember
on
the
that.
first time that got hit?
Yeah, we got hit.
Isn't that when we brought Ben in after that?
We brought Ben in.
Yep.
Actually 2 years in a row.
Ben Weaver.
We got hit.
I need to give a plug for Ben Weaver.
And unfortunately, we could have withheld that information, but we didn't. We chose to run it head on.
Right.
We got proper counsel between him and Ben Weaver came in. It was some ridiculous amount
Yes, it
Okay,
was. Yeah, it
worth
was.
more than everything still to this day that I own amount of money. And Ben was like, well, don't your subcontractors, because they were legitly subcontractors at that time, but they were fighting getting workers' comp and general liability. So Ben had them produce their gas receipts, what they paid in payroll, and things of that nature, because technically all of that money didn't go into their pocket. You know what I mean? As if we were paying them. So we had them come up with their write-offs, showed them to workers' comp. So then it reduced the amount significantly, but it was still like, oh my God. you know what I mean?
Right.
And then the second year came around that this happened. 90% of the people we had, switched over to like, look, we can't cut you a check till you get workers' comp, general liability. So if anyone out there that's listening who works for us and wants to know why we're such sticklers on you can't work for us unless you got your proper paper in place, is this reason here, because we'll get audited. We get audited every year.
If you don't have it, it goes back.
I think sometimes twice a year. We get actually audited for both businesses. So we get audited twice a year. So the second year wasn't as bad. We were kind of prepared for it, but again, we weren't going to do anything behind the scenes. We gave them what we had. It's like, we're trying, but these people are so used to not, they didn't have to have that documentation before.
Right.
But today you do, and it's a relief, because most people come to the table already stating, if they're a subcontractor, like, look here, we already have our $1 million policy for workers' comp. We already have our $1 million policy for general liability. Most of them, you know what I mean? And
it's a pretty common thing now.
Yes, thank goodness.
A lot of
as a result of the way the
subcontractors,
industry changed.
Yes.
Right. And one of the reasons it changed, and we probably don't need to go off on this tangent per se, but what happened was people were getting injured, okay, on the job. They were going to the hospital. They were saying, yeah, I got hurt on the job. Really? Who do you work for? They would say, whoever it was, let's say, right? And they didn't have workman's comp. Right. Okay.
Yeah.
So that goes into the uninsured workman's comp fund, and the states end up paying for it.
Right.
And they're like,
Yes, and that's how it was explained to me. It's like, we're paying for it anyhow.
Right.
You know what I'm saying? So we might as well pay for it up front instead of paying for it later, because if we could lower those costs at the hospital.
Right.
By
you've seen your costs go down by reducing accidents.
Yes.
Right.
Yes.
Having people driving safer.
Yes.
Right.
Right.
All those things.
All across the board.
All across the board. So
Yeah,
it's
man.
nowhere near. Again, same point. If you take care of this,
Yes.
it will no longer be the thing
Yeah.
that keeps you awake at night.
Listen, it's the furthest thing that I have to worry about, and things have happened. Okay, we've had car accidents already. We've had people get injured, and you know what? It's Ben, and one of our next episodes, Ben needs to come on.
Yep.
Yeah.
Because that's going to be a great episode too. So remind me to reach out to Ben Weaver. But like, there was one that was pretty radical, and Ben and his team and they took care of it. You know what I mean? I didn't have to see a courtroom. I didn't, and my mind goes right away. I'm getting sued. I got to go to a courtroom. But it wasn't anything like that at all. I had to call Ben months later, like, yo, what happened to that? He's like, I'm not sure. you know what I mean? But that's why it's called insurance.
Right.
Yeah.
Right.
You know what I mean? Like, he turned it over to the people that he needed to turn it over to, and they handled it. Whether they paid, I don't know.
Right.
You know what I mean? And I didn't dig deep enough to find out what they did, but it's a great feeling. Like you said, it's the one of the biggest things that I no longer have to worry about anymore. And the exposure that we have today. I mean, think about that, man.
Yeah, it's huge.
Yeah. But yeah. So let's go.
Yeah, I was gonna say let's change gears here, right?
Yeah.
So first of all, just a little bit more about myself. I've
Yes.
been doing this for 23 years. Started out real small. I actually started out, my daughter was real young and needed some extra income. I started doing taxes for Jackson Hewitt. Spent about a year and a half there. I said, I could do this myself. Unfortunately,
Yeah.
I mean, that's what I said. And went back to York College. I originally have a business degree in business administration from George Washington University in D.C. and then I've added to it from York College, personal taxation, business taxation, and of course with the regulations for what I do, we have to have a lot of hours every year of continuing education. So that's how we stay on
Yeah.
time.
You have your CPA, right?
Nope, no
No
CPA.
You're not CPA.
CPA is a certified public accountant, which everybody thinks, oh, you're a CPA. CPA is for working with public companies. CPAs are the only ones that can sign off on public institutions, their books. Okay.
Gotcha.
I don't want anything to do with that.
Gotcha.
Okay.
Yeah.
That's what a CPA really.
Okay, cool. Well,
don't get me wrong; they do taxes too, but you can't do corporate auditing and signing off on financials or anything like that unless you're a CPA.
Yeah.
Gotcha. Okay.
Yeah.
So you've been doing it for 20 years. You got your degree at George Washington University in Washington. All right. So what about some like tips and tricks for the general, John Q. Public, the homeowner, Johnny homeowner? So what's some tips and tricks on their biggest investment?
Well, yeah, I was going to say, first of all, your home is your biggest asset for most people. Okay.
Yeah.
And these days, that asset seems to be increasing rapidly.
Right.
Okay. House prices are going up. Long term, all I know is also if we're looking at inflation coming, which everybody's talking about, some people say it's transitory, some people say it's here to stay. Houses do best during inflation.
Yeah.
So you have your home, you love your home. What's something I can do with this? Well, we were just talking earlier. I have a home. It's all electric heat. $300 a month in the wintertime to heat my house. Solar can save you on that.
Right.
Okay?
Absolutely.
So why would I want to do solar?
Right.
Why would I want to do solar?
Right.
Well, if you do solar now and place it on your house between now and the end of January 1st, 2023, you get a 26% federal tax credit.
Right.
So let's say the cost is, I don't know what the cost of solar is, but let's say it's $25,000. That might be low, but I'm just using that as a
right.
So if it's $25,000, 26% of that will be a credit on your taxes. Now, if you can't use it all in 1 year, it carries over to the next year until you use that whole 26%.
Yeah, and that comes off of your tax, the tax owed.
It's a credit. It's a tax credit. So
Gotcha.
it's not a deduction. It's a tax credit. So that means dollar for dollar reduction in your tax.
Gotcha.
Okay. So if you owed $1,000 and your tax credit was $1,000, now you owe nothing.
Yeah.
Okay.
Yeah.
So that's a great way to help pay for your solar.
Absolutely.
Okay. And the government is saying, here, let's help you pay for your solar.
Right, and I like the dollar for dollar thing, and I went on there.
That's what credits are. Tax
Energy.gov.
credits are a lot better than deductions.
Yeah. Right. So if you go on to energy.gov, they have a really good self-explanatory way of explaining it to you on like what is a tax credit, and that's kind of why I threw this over to you. And because what is a tax credit? What does that mean? I know you kind of explained it, but I really didn't understand like what is a tax credit. And if you go on the website energy.gov, it's a tax credit is a dollar for dollar reduction in the amount of income tax that you would otherwise owe. For example, claiming $1,000 federal tax credit reduces your federal income tax due by $1,000. The federal tax credit is sometimes referred to as an investment tax credit or ITC, though it is different from the ITC offered to businesses that own solar systems. Now, we talked about that earlier today, Vic and I. That could be a whole nother episode because I'm curious because I don't know enough about the whole business tax credit, but I would like to, we should have did a little more research on that. But basically for a homeowner is, what this says, if claiming $1,000 reduces $1,000, you know what I'm saying? So if you could explain that a little clearer for our viewers.
So let's say the solar was $25,000, right? And you're getting a 26% tax credit.
Mm-hmm.
Right? Let me do this on my calculator real quick. Now again, even if you can't use it all in that first year, you still get these credits. They last.
Right. Now that's a federal tax credit.
It's a federal
correct?
tax credit.
Mike
So
Brown
let's
has
go-
a question. He said, "What about state or local incentives?" Can we get to that later?
Yeah, we're gonna touch on that
Okay.
for sure because there are
So-
local and state.
So let's say your solar system was $25,000. Your tax credit would be $6,500. Okay.
Wow.
Now, if you can't use it all in one, let's say your tax obligation that year was only $3,000. Right. You get to carry $3,500 over to the next year until it's all used up. I mean, it could take you 10 years, but even still, you're going to get the full credit.
Right.
Okay. In other words, it's not one of those use or lose credits.
Okay.
As far as Pennsylvania doesn't have any. They used to at one time when when solar first came out. Pennsylvania had a tax credit too. It was fairly decent. They have stopped doing that. I think it was. Yeah, I think that was some. I don't know where they came up with the money to do that, but it's run out.
Yeah.
It's kind of like the automobile and electric auto tax credits have slowly faded out too.
Right.
Because there was a certain amount of credits, and once they're all used up, they're gone.
Yes.
Right.
It was similar to that for solar in Pennsylvania. What Pennsylvania does allow, and I think I pulled this out for you before, was Pennsylvania, one of the things that happens is if you are banking, and we were talking about this earlier, Chris, if you're banking more energy than you're actually using, you can sell it back on the grid, is what that means.
Yes.
So you either get tax credits for the future, which means, or energy credits for the future,
Yes.
which means you're running your house for free.
Exactly.
Okay. Let's say your usage exceeds what you're making, right, to the solar. You would still have other credits available. Let's say during the summer you banked a bunch, and now in winter you're using them again.
Yes.
Or you can actually get get paid back money from the energy companies.
Now, I don't
utilities.
think Pennsylvania does that, or at least the solar that we use doesn't do that. Now, they do a credit, like you were stating. Yeah, they'll do a credit where you can bank it and then net meter it.
When you use more electric in the wintertime or something,
Yes.
instead of having a $500 electric bill, if you got $1,500 balance in your credit account,
you can use that for your 3 months.
You just won't pay it.
Use that for 3 months on your electric bill in the winter.
Yeah.
Right.
And where did you find this information?
This is actually Pennsylvania's website.
Oh, okay.
This is actually, I got this from Pennsylvania, 2021 Pennsylvania Solar Incentives, Tax Credits, and Rebates.
Yes.
Okay. And there's a whole thing here about the incentives that are available, but they do not give, does not give tax credits similar to the federal.
Gotcha.
Okay.
And that varies from state to state.
That is correct. I'm just telling you about Pennsylvania.
Because Mike Brown's from Maryland, so I believe their incentives are more, to be honest with you.
Well, Maryland does follow federal in regard to how they do their taxes. Pennsylvania is a little bit different.
Yeah.
Maryland follows the federal guidelines, and
Gotcha.
it could be entirely possible that is an option.
Yeah.
Because they allow you to do certain credits that Pennsylvania doesn't. Pennsylvania is basically a flat tax.
Yep.
Okay.
Yeah.
3.07% with very little deductions, and that's really just the way they do it. It's
Awesome.
a simplified system.
Right.
Maryland, on the other hand, has a higher tax rate, but allows you to itemize deductions and things like that, which can lower your tax bracket.
Cool. Right. The thing that I like about it too is like, okay, so let's say your solar was installed in 2019, okay, and you didn't know about these tax credits for whatever reason. You do your own taxes through TurboTax. You just didn't know about it for whatever reason. Your accountant wasn't educated on it. Whatever the case might be. So what they're stating, and correct me if I'm wrong. So back in 2019, there was a 30% tax credit.
It actually was from between the period of December of 31st, 2016 through January 1st of 2020, which is basically the end of 2019. There was a 30% credit.
Wow. So
it's slowly going down.
Right. But you can still, like, let's say I want to get
if you
taxes
never
done
claimed
today.
it, sure, you could, but you probably have to amend your previous year's taxes.
Okay.
Right. Yep.
Okay, so you could amend that.
Right, you could amend that because I missed the credit.
Yeah.
Okay, because I missed
Okay.
the credit, you would amend your taxes for that year.
Okay.
And get that credit.
Perfect.
And then carry it forward from there.
Okay. And that's not hard to do, right? To amend your taxes?
It's really not.
Yeah. Okay. Awesome.
Now, if you're amending from, let's just say 2017, would you have to amend
You really
17,
can't, you
18,
can't go back
19?
to 17 for amendments
Okay.
at this point, unfortunately. It's a 3-year limit on amendments. After 3 years, it's lost. That's
Gotcha.
it.
Oh.
You can still file it, but there's not
If
gonna
you
be
go back that 3 years, though, would you have to amend every year and keep carrying that over on
up until
on
you're in the
each
current
tax?
year, yeah.
Okay.
Yeah,
Okay,
that's correct.
gotcha.
Yep. That's correct.
Okay.
So again, so that 30%'s gone. It's currently at 26. After December 31st of 2022, it goes to 22% through 2024. That's the end of credit at this point in time. Energy credits for solar. That doesn't mean they won't be extended.
Right.
Other energy credits, which we'll get to a little bit on windows and certain energy saving furnaces and
Okay.
things like that, air conditioning units.
Okay.
Those have run out so many times I can't begin to tell you, and they always extend it.
Yes.
So
we're hoping that they
yeah,
extend
they
this
may
as well.
very well extend this.
I
Especially,
believe they would.
You know, how you feel. Leaving the political stuff aside,
Yes.
there's a move towards green. Okay,
yes.
it's
Right.
a big move towards green.
Right.
This helps that. So
Absolutely.
I can't see that they won't.
Right. And they may even bump it up a little bit.
Yeah, I mean, you know, I guess it's possible that, you know, right now they have a problem with their budget, but
That's
you
true.
know, that
Yeah.
serious
That's
problem
true.
with their budget.
Yeah, I tend to forget about that sometimes. Not very often, but I do forget about that. Cool.
So
Now-
real briefly, there are other energy credits, okay, but they continue to decline too. So there's energy efficient windows, doors, and skylights,
Which we
roofs,
install. Yeah.
Yes.
Install those.
Absolutely.
metal and asphalt roof products, not shingle, obviously, and then insulation. Okay, if you re-insulate your house.
Now, You said metal and asphalt.
That's what it says. Metal and asphalt.
Shingles are asphalt.
Yeah, I think it's a more specific type. Unless there's some energy efficiency thing involved.
Okay. There could be due to ventilation. If your ventilation,
we just know, metal, I guess, provides something that,
Yeah.
because it doesn't breathe. I guess I don't know.
No, I don't know.
It's a guess.
We'll have to look into that.
Yeah, we will.
Sure.
That's a good point right there.
So, and then also there's other credits for energy efficient heating and air conditioning systems, water heaters, natural gas, propane, or oil. So if you replace your water heater with a high efficiency water heater, or higher efficiency,
Right.
you can get a credit for that. Now these credits aren't huge. So let's say your hot water heater is $1,000, it's a 10% credit.
Yeah.
Okay, so
Right.
that's $100.
Right.
But
Okay.
it's still a tax credit. Okay.
Yeah.
And then biomass stoves, don't worry about that. It's so these all have to do with your personal residence.
Okay.
It has to be your personal residence. It
Gotcha.
can't be your rental property. There's other deals for rental properties, but
Yes.
this is primarily for your personal residence.
Gotcha. Okay, so let's talk about renters. Okay, so we talked about homeowners and stuff like that. I just for my own personal and for our viewers' information here. So let's say I was renting, and is there any tax credits or breaks for a renter, not just a homeowner?
Well, I mean, so we talked about this before the show. So for a renter who's self-employed, right, they can still use business use of their home.
Okay.
Okay. For a portion of their house that is dedicated. It's got to be a specific place in the apartment or house or
okay.
whatever it is.
All you people working from home, over
Right,
these last few years.
dedicated just to that. It can't be the kitchen / office / nursery. Okay,
Yeah.
but a room dedicated to your business can still be deducted whether you're paying rent or have a mortgage.
Okay.
So you can still do business use of your home. That's only for self-employed individuals.
Okay.
Pennsylvania still allows it for W-2 employees. Federal does not. That changed in 2019. Where basically unreimbursed work expenses for W-2 employees no longer exist on the federal side.
Okay, but on the state
On
side.
the state side, you still can. So everybody that was working at home this year during the pandemic
Yes.
got to take that on the Pennsylvania side,
And that's a great
even
point.
if they were a W-2 employee.
Yes.
It doesn't add up to a whole lot, but
Yeah, it's
It kept me from paying in this
So,
past year.
Okay.
so you're
So-
writing
so-
off one portion of your home, okay, that you're renting. Now, what about like the electric, the gas,
Yeah,
the water?
so-
If you're paying for all of that, like a certain percentage of that,
yeah.
is
So
covered
let's
as
say,
well?
let's say it's a house. Let's say it's a 1,500 square foot house,
Mm-hmm.
and your office is 200 square feet. That might be a big office. I don't
Right.
know, but so the percentage of that of your total house is what you can use towards everything else: the utilities, sewer and trash.
Gotcha.
Basically anything else you have to pay for in regards to the house.
Gotcha. Okay, I'm gonna backstep here just a little bit. I just thought of something. Okay, when you were talking about like all this energy efficient, like HVAC and heating units and windows and things like that. So what if I remodeled my house? Okay, and I had solar put on it. I had new windows put in. I had I don't know, metal roof put on and a new HVAC unit. Can I use all of those credits then?
Yeah, but you have an overall credit limit of $500
Oh,
for those particular items, not the solar.
Oh, okay.
But all those other items you're talking about.
Yeah.
The max credit you're going to get ever is $500.
okay. So if I did all of those things, I can only expect $500.
$500 credit.
Yes.
That is correct.
Okay. Well, now what if I don't?
And that's a lifetime. So in other words, even if you did one year and the other the next year, you're still limited to that $500.
Still pulling out of that $500
Still
bag.
putting on it. So you could do 100 a year, but
Okay. Shoot, I had another question. I can't remember what it was. Forgot it. Whatever. Okay, so back to the renter thing again. I was thinking that when you were talking earlier, but I didn't want to interrupt you. I wanted you to finish where you were on that. So back to the renter. So if you're renting and you're working from home, and you're W-2, so you can only do state and local on your
That is correct.
on your taxes.
You don't
Okay,
technically
this-
own the residence.
This was
so.
one of my questions for that too. Okay, so let's say I'm not self-employed. I'm working from home, and I get a tax return. Okay, I've got a large family. I'm getting money for each kid. Whatever. I'm head of household. All that good stuff. Well, would I still get that $500 or whatever? Okay, so maybe I'm thinking of two things here. Would I still get the $500 tax credit how would that work? So let's say I'm a homeowner, and then let's go back to the renter for a second. So let's talk about Johnny homeowner that went ahead and remodeled his house, gets a tax return. How does that $500 tax credit work then?
Well, they would just be added to it would just, decrease their tax liability by $500. So if they were getting a $2,500 refund and they owed $1,000 in taxes, now they owe $500 and they get an additional $500 refund.
What if they don't owe taxes? What if they paid in all year long?
Well, then it's not a refundable credit, if that's what you mean.
That's what I guess I'm asking.
It's only there's certain refundable credits. That is not a refundable credit.
Okay, what would be?
So you
a
have to have a
refundable
tax
credit?
obligation.
Yeah,
to
but
take the
I feel
benefit.
like there's very few circumstances where somebody at the end of the year, without doing deductions and like all that kind of stuff, ends up not owing taxes or owing negative taxes. Like I feel like that doesn't happen as much. I mean, once you add in like the child care credit,
it depends on the income bracket.
Right.
Okay.
Yeah, but usually with like homeowners and that kind of stuff,
exactly. Yeah.
You usually have X amount that you owe off of your AGI, and if you get a tax return, it's usually because you've taken your standard deduction, added all the child care credits, added all the all the other credits combined that you get a couple dollars back, and you would still be able to add that $500 on there because technically
that is correct.
You still owed taxes.
Your refund would theoretically be increased by $500.
Right.
Yeah, if you're getting a refund.
Okay.
Or if you owed, what you owe would be reduced by $500. So
Right.
it's not strictly just on refund.
Right.
So
Okay.
whatever you thought you owed, you'd owe $500 less.
Okay, so let's think outside the box here for a minute. The worst case scenario. What if I owed child support? Because I know now, and I don't, and I'm just bringing this up. Just trying to think of any scenario with anyone out there listening right now that maybe they're going through a situation where they owe $1,000. Okay, in back child support, and typically the IRS steps in. They'll scoop out what they need. Now, what if you're owed one of these or have a $500 tax credit coming to you?
Oh, they will take that too.
They'll take that too.
It's part of your refund. So
Okay.
whatever your refund is, they're going to take whatever they're supposed to get.
Okay.
If it's all of it, they're going to take all of it.
Yeah. Okay.
There's a couple things they can take it for: student loan debt, child support, and if you failed to pay back unemployment for some claims that maybe you didn't deserve to get.
Great information.
Those are the three things that they can garnish your tax return for.
Okay. Awesome. Okay. So those of you that owe child support out there, guess what?
They're taking it.
You're getting jacked.
Now, when you were talking about renters, unfortunately for renters,
Yes.
things are limited. On the flip side, though, landlords, solar is necessary. We're talking about the credit, for a homeowner, right?
Yeah.
Well, landlords can install solar too and save money because it's a depreciable item. Okay,
Right.
so they get to recapture the full cost of that, whether it's at one time or eventually. You see what I'm saying? So it's reducing their cost of the equipment. They get to write off the whole thing.
Wow.
Eventually. You see what I'm saying?
Yeah.
And then they're saving on their utilities. Now,
Yes.
if the tenant's paying the utilities, well, who cares? But it's also a selling point. So you want to rent out. Somebody wants to come rent your house, and you go, "Well, I have solar, so your energy costs are going to be, minimal."
Yeah.
No, that's a selling point to me if
Yeah.
I'm looking to rent a house, right?
Right. So where that would work probably really good is if it was a multi-unit and the meters weren't split up and the landlord was responsible for the electric bill.
Right. Now that's a case where that would apply. That is correct.
Okay. But for a single family dwelling and they paid all the utilities, would there be any?
Well, I mean, again, so if the market for housing is the same, I'm saying everybody's the same, and you're coming to look at my house that I'm trying to rent to, and I go, your utility bills will be slim to none.
Yeah, cut in half maybe.
As opposed to over here, you come to rent my house and it's $300 a month for your electric.
Right.
Okay.
So you're providing the most energy efficient home possible for the tenant.
And again, as a landlord, that is a business, and the cost of the solar is fully depreciable.
Right. Okay. So when you say that, what does that mean exactly?
So the full expense of it. So back to our original $25,000 unit, right?
Yeah.
So that would be spread out over time and expensed. So it reduces your tax obligation each year.
Oh, for how long?
So there's a code. There's Section 280 of the IRS code that allows you to expense certain things. I'd have to look and see whether the solar would qualify for that. But otherwise, you're looking at 27 and a half years. So because it's basically so there's
It would be
certain
considered an asset, right?
certain types of property. 1245 properties. If you took a house and turned it upside down and shook it, all the stuff that fell out is 1245 property, and everything else is 1250. Okay? So this is 1250 property, 27 and a half years on residential.
Okay, thank you for explaining that in layman's terms.
I mean,
I
I had somebody explain it to me that way. I was like,
It makes sense. It's not attached.
Yeah,
right. So
You
everything
carry
that falls
it in
out
here, you
is
can carry it out,
1245
yeah.
property.
Awesome.
And anything that doesn't is 1250
Good
property.
stuff, man. You're killing it, brother. For real. Good stuff. Okay, so let's talk a little bit about business. We're running out of time, which I can't believe already. We
are talkers.
Yeah, for sure. Get us all in the room together. Look out. A couple Red Bulls. Yeah, forget about it. Okay, so okay, let's talk briefly about like the differences between IRAs and 401ks. Like, what's the difference? I know we're totally spinning things around here a little bit, but I'm interested, and I'm sure someone out there listening is probably interested in that as well.
Okay, well, there's a number of different things that are available there. Number one, first of all, you have Roth Iras. Okay, Roth Iras do not provide a tax deduction. Okay, but the money that it earns over the life of the IRA is tax free. In other words, you never pay tax on that money when you take it out.
Unless you take it out early, right?
Right, that'll be a penalty.
Right.
That'll be a penalty, but you're still not going to. You'll only pay tax on the earnings. If you take it out early on a Roth, you only pay tax on the earnings and a penalty. Okay.
Gotcha.
But so as opposed to a traditional IRA, okay, individual retirement account, I put money in there every year and I get to deduct that from my taxes. Okay, it's an adjustment to gross income. It builds up over time. When I'm retirement age, I start taking it out. I pay tax on the full amount coming out. Okay, but I got the tax break earlier. Preferably, I got the tax break when I was in a higher tax bracket. Now I'm retired. Hopefully, my tax bracket's lower. For most people, it is, right? And so that's the benefit of that. But you also get the accumulation over long periods of time that you don't pay any tax on while it's accumulating.
Right.
Okay. Then you have a Sep Ira, okay, which many smaller business owners will have because you have to offer it to anybody, and you and me have talked about that. So if you have full-time employees that have been there, you can set the limit, I think, at like 2 years. If they've been there for more than 2 years, you got to offer it to them too. Okay, so that becomes a problem with big companies being able to afford it. Okay?
Yeah, right.
But a Sep IRA, same thing, just like a traditional IRA, but the limits are higher. So I'm a sole proprietor, right? I can put in more into a Sep IRA than I can into a traditional IRA. So it allows me to save more money the same way and still a deduction on my taxes.
Gotcha.
So for a sole proprietor or a single member LLC, they're great. Okay. And then what was the other one? Oh, 401ks.
Yeah.
Well, those are offered through your work. Okay. You can actually, they now have what's called a individual 401k. I can't tell you that I'm an expert on that. So, but they do offer those too for individuals. Okay?
Gotcha.
But the limits on contributions to an individual for IRA is, I want to say 19.5 this
you're
year.
right.
Is the amount you can contribute to a 401k in any 1 year.
Yeah.
Plus your
Opposed
employer,
to 5,000 or 6,000 with an IRA.
right? 5,000 or 6,000 for an IRA.
Sometimes,
Now a Sep IRA, it's 25% of your net business income.
Oh, okay.
Okay.
Yeah.
So again, for a sole proprietor, great deal.
Right.
But let's go back to the 401k plus the employer matches.
Right.
Okay, whatever. I mean, they might match 2%. I don't know, whatever that is. You're also getting that also. I mean, the first thing I tell people when they have a 401k at work is take advantage of the employer match.
Yeah,
that
it's
is
free
free
money.
money.
Yeah,
that
absolutely.
is free money.
Yeah.
You are getting paid extra.
Yeah. Right.
Okay.
And just in case anyone doesn't know what he means, what he's saying is when he threw that percentage out there, let's just say, we have an IRA, we present it to an employee, we say, hey, we match 3%. That means
401k.
401k.
Yep.
As long as you commit to withdrawing 3% of your check every week or every pay and putting it into this account, your employer will match that exact 3% and put it in as well. So you're now getting 6%, basically. So
3% for free.
yeah, but if you only put 2, they're not going to put 3 in. They're only going to put 2.
Right. Or some employers will match up to a certain amount. Okay.
Right.
They might match up to 2 or 3%. And then you can still put in more.
Absolutely.
That's all they'll match.
Yeah.
And what I tell people is at least get the match.
Yeah.
Get the match.
Yeah.
Okay. It's free money.
Yeah, and it makes sense. So it's 2, 3, I think up to 5%. In some cases, extra, like you said. If you're putting, I don't know, $100 a weekend. Well, that's 5% of $100 is $5.
$5.
You know what I mean? On top of that $100 over the course of however many weeks, months, years later.
Decades, hopefully, right?
Yeah, exactly.
Now,
Decades.
let's go back to the Roth IRA. Roth IRAs are real popular, okay?
Yep.
I personally don't find them to be popular for me because I'm old. I don't get the long-term tax-free accumulation in a Roth IRA. I don't.
Right.
I want the tax break now. Does that make sense? Younger people, I tell them all the time, you should have a Roth, but actually you should probably have both. Okay, to be honest with you, because then in retirement you have some tax-free income and some taxable income.
Nice.
To
Offset. They offset the.
Well, no, whatever.
cost a little bit.
But in other words, you want multiple funding streams in retirement.
Yeah.
Okay.
Right, exactly. Yeah.
So
no, that's a
you
good
can,
point,
but
too.
of course, we all know when you're young, it's kind of hard to start saving too.
It is tough.
So, yeah.
It is tough,
Right.
man. You know.
As I get to be my age, I'm
Both
trying to sock away
very
as much
good
as I can.
points,
I
very-
mean, that's
okay.
serious, because now I'm looking at retirement. It's like,
Right,
whoa.
right. So
I
both
wanna be able
of
to have
them
some fun,
sound
right?
like they both have valid points, pros and cons. I'm sure. The IRAs, I think the thing that early on, like you said, younger IRA, little, affordable, I guess, right? 401k, you get in with a good company that matches 2.5%, whatever. Hopefully you've been there long enough, so you got your finances under control. Pick an amount each week that you put back, it gets matched by 2.5%. That sounds like a good deal, and why I wanted to bring that up is because we're in the process of doing it. It's no more a dream; it's becoming reality for us, and that was one of my, putting someone on the books, providing health insurance. Now 401k is like, holy crap, you know what I mean? Who would have thought? But that. God, wouldn't it be great to have someone be able to retire from here someday? You know what I mean, and have a nice little nest egg put back, and know that it came from here. That they put their time in, they put their hours in.
That's one of the way, and we discussed this. That's one of the way you attract quality people. They want to, quality people want to work for a company that provides the benefits that they're going to need long term.
Yeah, man. Yeah, that's good stuff.
Yeah. Yeah. That's one of the things that people are looking for. Like you said, if you want me to invest in you,
right?
Well, will you invest in me long term? Right? That's one of the ways that a company will invest in you.
And what you want is quality employees.
Yes, right. For sure, man.
So you have to give, you have to be able to provide what quality employees desire. I mean, or, I don't know about desire, but require.
Yeah, exactly. Right. Let's do a couple shout outs, man, because we got a good bit of people in here. I know Alan Tyson's on there. He said 401k matching is free money. You're dumb if you don't take advantage of it. Vic said that you're killing it, Mike, in case you didn't know that already.
Thanks, Vic.
Yeah. Vic's back there killing it. He's another man behind the scenes.
That's right, behind the scenes, Vic. Victorino.
Yeah, Victorino. Right. Victorino, my man. Early on, someone said they couldn't hear. Jana, good to see you. Mike Brown, good to see you. Eric, good to see you. For some reason, I'm only seeing a couple of people. David, thanks for watching, buddy. Do you see anyone else on there?
You hit all the people that I see in here. Chris Markey, shout out to Chris Markey on the new gear. I'm rocking one today. These things are awesome. We've gotten great feedback on it, Chris.
Yeah.
Appreciate
I know
you,
there's more people on there. I can see that.
Gio Molina, Cody Rogers.
Yeah.
Rock Arnold. And
Rich
David
Martin.
Bruno.
Thanks for watching. Yeah, David. Thanks for watching, buddy.
Yeah,
loyal listener.
Brittany Butler, what's going on, girl? George Myers is in here.
Yeah, he is. Hey, George.
Yeah, that's all I got, buddy.
Where's Carol at tonight?
That's all I got.
She's actually in rehab hospital.
Oh, really?
Yeah, she had major back surgery 2 weeks ago.
There's not much of a delay, is there?
Yeah, no delay at all.
All right, so let's talk about, before we wrap things up, I know Tommy Cordell had sent us something, but let's do a little recap of the food drive.
Yeah, so that was awesome, man. That was awesome. It was a great
good job with that, you guys.
Thank you. I don't even know whose idea it was, but we set a goal once we realized that we were going to start collecting cash from employees and businesses and stuff. We set a goal for $5,000. We exceeded that, so we were able to partner with Dottie's down the street here, a local family-owned business.
Yes.
We went in there, I think it was like 6 or 7 of us, and just filled shopping cart after shopping cart after shopping cart. We bought an entire skid of bottled water, skids of just random hygiene accessories.
Yeah, I saw you unload stuff on.
Oh man, it was awesome. I mean, we literally filled a box truck.
A box truck,
We
16-foot box truck was full
with food.
Ridiculous.
The well was running out of spots to put this stuff.
Yeah,
I mean, and not only that, we went and spent all this money, but we didn't even spend all the money. So we basically, what we spent, we took to the well, and then we gave them a check, basically the equivalent of what we just brought to them. So they can go out and do all this shopping and buy all these items again.
Yes.
I feel pretty confident that they're going to get through the summer.
I do too.
With what we contributed.
They do a lot. They do a lot down there.
Oh my gosh,
that's true. That whole entire church does a lot. Right. Why we were able to do that was, another huge shout out to Dottie's. They had already had like a skid or 2 skids with discounted stuff that they were already prepared. I got the whole entire list. It's printed out and it was discounted. Okay, They had already gave us a discount on stuff. I think they were pretty surprised that we want more than that.
Yeah.
We want to crash your store if you don't mind. And of course they were like, yeah. I think they were kind of prepared because it seemed like they had more staff there to accommodate us. I mean, it was like they were professional. I mean, it wasn't a chaotic mess. They were helping us, and then someone pulled Vic to the side and pulled him in the back room, and was like, So they were like, well, these are things that we're getting ready to pull off the shelves. That for whatever reason wasn't a big.
Well, that was the back stock. So instead they were like, here, instead of taking all these items off of the shelves out there.
Okay.
Come back here and shop out of the back stock.
Yes.
And then that would prevent their employees from having to go restock these empty shelves.
Yes.
Right.
I mean, I filled a shopping cart with just canned veggies, and
It's kind of funny.
it was a lot.
Back there was to stop.
Yeah.
Yes, right?
It was his idea.
Yeah, smart guy.
200 IQ stuff right there, man.
But they
That's
were
good stuff.
so
That man a
thrilled.
raise.
They were so happy to be a part of it. I don't think they realized, how big it was going to be. The owners were there. Great, wonderful people. One of the ladies wanted a roof. She was like, "Hey, give me your business card." I mean, they were just so helpful, so polite. Wanted to go. They're ready for the next one. But without them giving us that discount, we wouldn't have been able to spend $3,000 worth and got the amount of food for $3,000 that we received. And then had money left over to give to the church, which was huge. And then the local businesses, other businesses that played a big role was, Chris Markey at To the T Outfitters, the YBA donated, Carrie and Kevin Lauer over at West End Auto. They were involved. David KX.
Insurance Services of York.
Yep. Ben Weaver.
Insurance Services United.
Man. Yep. They played a huge role in this. Man, I wish we should have brought the list of everyone. David KX and Lewis from Allied Maintenance. Jim Hankey, if he's watching, big thank you to you because personally, and on the behalf of Bobcat of York, they donated $500. Which is freaking huge. You know what I mean? We're so grateful that we postponed it. Originally, it was set up for May something.
Yeah,
May
it was
20th.
a week after the home show.
Yeah, it was like a week after the home show. We were all physically, mentally exhausted from trying to promote that, trying to get that together. And
there's no way we would have been able to do that, man.
Yeah, wouldn't have been able to pull it off. And it just felt like we weren't getting enough traction because we didn't have the energy. Physically, emotional energy to promote it and just have the energy to do it. So we bumped it a few weeks, and man, it just seemed like everybody there was an outpour of just people that wanted to get involved with it. So
it was just a great day.
It was cool.
It was a good day. Yeah, hanging out with the squad and going from place to place.
Yeah,
lots of laughs and and just good vibes, good everything, man. It was good. Yeah. It took us 45 minutes. We formed an assembly line.
Yeah, man.
Had one of those roller carts.
I saw.
It was a 45-minute process just to unload the food and
with
water
7 or 8 of us.
Yeah, it was a lot of stuff.
Yeah,
a lot of stuff. So,
yeah, man. Good stuff. Man.
I can't wait till next year. I mean, who knows? Maybe we'll do something again like it this year. We gained another partner in the 21 Turkey Salute.
Yep. Dottie's gonna hook us up with turkeys and stuffing and all that good stuff for next year or this year actually for
It's only 5 months away, man.
I know, right? What is happening this summer right now, man? Please slow down. Okay. Please.
It's because we're busy, man.
End of
June. Because we're busy. Time's flying.
I think I've gone fishing once so far this entire nice warm season that we're having here. It's kind of been up and down.
I know it has really. It has.
Yeah, the weather.
It was cold when I went to work this morning.
Yeah,
it was
40
like 40 degrees.
Chilly,
yeah,
man.
42
Definitely
degrees this
chilly.
morning. So before we end this, let's do the old Tommy Cordell Motorsports with what's his thing that he's doing?
Racing to Reunite.
Yeah, I can't stand saying it. I can't say it right. Racing to Reunite.
Should be coming up here. in a
Yeah,
second.
good cause, good people. He's involved with trying to locate missing children.
Yep.
So tonight is
It's Maya McDowell. She has been missing since June 7th, missing from Milton, PA. Her date of birth is August 1st, 2007. She's 13 years old. She's got brown hair. She's 5'4", 180 pounds. There's a tip, I guess, that she may be traveling to Hinesville, Georgia. If anyone recognizes this person, even if you don't, give this a share. If you think that you may know something or know where she may be, call a number at the bottom, the 1-800-THE-LOST. That's the national missing person hotline. Let's try to get her reunited with her family.
Yeah.
If everyone wants to screenshot this and give this a share, we'd appreciate it. I know Tommy would appreciate it.
Yeah.
And let's see if we can, if anything else, help her parents sleep at night knowing that people actually care.
Absolutely.
Still looking for their child. So.
Yep. So take a screenshot, save this, post it on Facebook.
Yeah.
Share it with your friends.
Yeah.
Like Chris said, her parents will definitely be grateful.
Absolutely.
I'm sure.
Absolutely.
So tonight was a great episode.
Great episode, man.
Yeah,
Flew.
Yep.
Mike, appreciate
Yep.
you, man.
Yeah, man. Thank
Thanks,
you
guys.
for everything you do.
Love
did.
what you're doing, man.
Yeah, thank you. Thank you very much. We couldn't do it without you. And
Yeah.
Vic, always you did a fantastic job. Thank you so much for everything.
That's right, Vic.
Thank you to our viewers, our listeners. Tom
Yeah.
Golden, good to see you, buddy. Jim Hankey, I'm glad you got
Tom,
to
how you
watch.
doing, Tom?
Yeah, I'm glad you got to watch tonight and get the shout out. You and
Yeah.
Bobcat, thank you very much for everything that you guys do for us. And everybody, thanks for tuning in.
If anyone has not done it, any new people here, make sure you like the page. Hop over to Mike's Facebook page, give his business a like. All the TC Backer family out there,
Yeah.
show his page some love. And we'll see everyone next week, next Wednesday for episode 79. Hopefully everyone has a good rest of your week.
Yeah.
And we'll catch everyone then.
See ya.